to the point where they mentioned that NVIDIA's sold out. They're sold out for a long time. They're sold out probably through 2025.
Yeah, listen, the spending plans that we've heard that have been reaffirmed from the likes of Microsoft or Meta or Alphabet or Amazon have done nothing to dissuade anyone from thinking Nvidia is going to still be the key beneficiary.
Right, but you take
now we have this big rotation that's going on in the marketplace. There's concern ultimately about the consumer, whether the Fed is now behind the curve. But none of that seems to go to the heart of the matter, which is Nvidia is going to be potentially sold out for some time to come.
I mean, you've listened to Amazon, of course, they have to build their own, but that's a defensive move because they can't get enough.
Building their own chips.
Right,
or designing their own chips.
But I mean,
so
you look at Amazon. Here's the way I look at Amazon. I think it's important because the stock's down so bad today, I would be a buyer. Amazon knows that there's a lot of business, so they have to buy a lot of planes. They have to put up hangars. Now, you don't, when you're buying a lot of planes, you're not putting people in the planes. So they buy the planes first, costs a lot of money. And then you have to bet that they're right. I want to bet the chassis is right. Or you could actually use a different analysis. They are buying a Stradivarius, and you can't just learn like a violin, a Stradivarius. You got to learn. It's a little harder to learn. It's a little harder to teach. Inferential. So I'm just trying to find analogies so people understand that it's taking some time. They can't just turn a switch. Yeah. And that's making people very upset. And the fact that they mentioned the Olympics, I mean, people's like, are you kidding? I mean, but the country is like in a 2012 mode. I mean, they're watching the Olympics. They're not buying as much. And what they are
because they're watching the Olympics?
Them, not me.
Well, after a week where we got ARM guidance and Western Dig guidance, and now Intel and now Microchip, you're still bullish on the space at large?
No, I'm bullish on companies that really have or are going to the GPU or helping NVIDIA.
So it's a narrower set of bullishness.
Look, I mean, when the conference call for Amazon, they absolutely know that they have to spend money on AI.
Jim Cramer is enthusiastic about Nvidia's potential, predicting a dramatic increase in its value, suggesting a 100-fold return over the next decade. He describes this as a once-in-a-generation opportunity and urges viewers to stay tuned for more details. Cramer acknowledges recent updates from various tech companies and guidance from firms like Intel and Microchip, but emphasizes his continued optimism about Nvidia. He notes that despite the market's current rotation and concerns about consumer spending, Nvidia's dominance in the GPU market remains strong. He highlights that major players like Amazon are struggling to keep up with Nvidia's demand, which could mean Nvidia will be sold out through 2025. Cramer also addresses recent criticisms and reports suggesting that the AI technology hype might be overstated. He firmly disagrees with the notion that Nvidia is in a bubble or that AI technology is overhyped. Instead, he points to ongoing substantial investments from major tech companies in AI infrastructure as evidence that the technology is on a solid growth trajectory. He dismisses concerns about delays in Nvidia's chip production, asserting that Nvidia's technological lead and critical role in the AI supply chain will keep it ahead, even if there are minor setbacks. Finally, Cramer makes a distinction between what he terms AI 1.0 and AI 2.0. He remains confident in the infrastructure building stocks involved in AI, such as semiconductor and data networking companies, predicting continued substantial capital expenditures in this sector. However, he expresses skepticism about AI 2.0 stocks, which claim to offer revolutionary AI-driven products but have yet to prove their financial viability. For now, Cramer believes that investing in AI infrastructure stocks is sufficient for realizing the potential of the AI revolution, without needing to rely on the more speculative AI 2.0 companies.
Would you give it a year? If it doesn't happen in a year, right? If the rhetoric doesn't change, then would you start to get nervous?
I'd say if we sit here in January, February, and we haven't seen it. We haven't seen the monetization from a software perspective. We haven't seen it from an actual monetization outside just Mag 7 to call it second, third, fourth derivative. If McDermott comes and all of a sudden he's negative on AI, then that's where, of course, we have to take, sort of look at it. But right now, it's actually more emboldened because of what we see, not just from earnings, but from our checks.
I've never seen Bill McDermott negative on anything.
Well, yeah, he has pivoted before.
Yeah. And it comes if McDermott, Stu, Nadella, Cook are seeing something, I'll take them despite many that are right now kind of throwing gasoline on the fire.
There is this report that we've been seeing about the delay in the Blackwell chips and what that could potentially mean as an effect for some of those customers like a Meta, Google, and Microsoft. How are you watching that story? Is this going to have an impact, do you think?
I think what happens as it pertains to Nvidia is they may have a delay of the Blackwell series chip. Could be as long as about 90 days. But I think in the meantime, they're so far ahead with their technology that no one is going to come in that vacuum and steal market share. So it's theirs for the taking. I think their revenues are simply going to be delayed for about a quarter or two. And because they're the most important cog in the AI supply chain, sure, it's going to impact the AI infrastructure building of some of those hyperscalers, as we call them in the States, the 4 big companies that are spending billions and billions on building their AI infrastructure.
Well, I know Sam scratched this point, and she raised this issue about the AI hype being bullish on tech, which you are broadly speaking. But drilling it down to specifics, if a activist fund manager with the credibility of Elliott management says that there is an AI overhype and that these stocks are overbought, do you think the pressure builds to the downside?
I think we need to distinguish between what I call AI 1.0 and AI 2.0. 1.0 I continue to be very comfortable with. Those are the infrastructure building names. Typically semiconductor companies, data networking companies, and data server companies. Now, the 4 hyperscalers have promised, I guess nobody promises, but they've said recently in their conference calls that over the next 12 months, they are going to spend $227 billion combined on AI infrastructure. I don't think they are going to change those plans. And they also say that their capital expenditures in the year afterwards are going to accelerate from that very high base. So I like all those stocks. Then you get to the AI 2.0 stocks, which I'm not sold on yet, so I don't own a single one. These are the companies that claim after all the infrastructure building spending that they will have these marvelous money-generating products featuring AI on the other side. I'll believe that when I see it. But for my thesis to be right, I only need the AI 1.0 stocks. As of yet, I don't need the AI 2.0 stocks.
Yeah, I know that was weird.
Damn.
Jefferies does have a note today saying that clients are calling in asking about potential delays in Blackwell. And then we did have the report yesterday about DOJ reaching out to rivals of Nvidia who have been complaining.
Well, it's slower. It's slow, but they never really said it was going to ship in volume. So people who think it was going to ship in volume, they should go back over. They should talk to Jensen. He never said it's going to ship in volume right now. Never.
Right. There is still this question about return on invested capital, whether there will be. By the way, the answers uniformly from the hyperscalers has been yes. And Jassy said the same thing.
How about Zuckerberg? Remember?
Yeah. He talking about generative AI, Jassy said it's going to get big fast, and it's largely all going to be built from the get-go in the cloud, which, as you know, allows the opportunity for those businesses to continue to grow.
The cloud's growing.
You've heard no let-up whatsoever
90% for the cloud. That's what we should be focused on, but we're all focused on
those who are making the capital allocation decisions.
Can I just say one thing?
You can say many things.
I'm sorry if you were mad at me.
I
apologize.
I'm not mad
I got a little excited because it's a big day, but I regret that I did.
The AI revolution story, I believe, is well intact. And all of our checks, this is not a time to panic despite the white knuckles that we're seeing in the market.
The FT is reporting that Elliott management told investors recently that Nvidia is in a bubble and the AI technology is overhyped and that the reality is not matching the hype. You totally disagree, I know.
I couldn't disagree more relative. If we were here before earnings, before conference calls, and I think we even talked about it, let's see what numbers look like. Look at the Azure acceleration. Look at what Lisa Su talked about from AMD. We saw what we...
I thought Azure was disappointing.
In terms of the acceleration that they're guiding for second half. That's really talks about the monetization, that moment is right here. And my view is, look, the haters have continued to hate. The bears have been there for the last few years. I get right now it's easy to come out and kind of yell fire into a crowded theater in tech. We don't see it because it's not just from the call.
You see the value matching the hype.
I actually think the street is underestimating what is going to be $1 trillion of AI CapEx over the next 3 to 4 years in terms of across tech. And nothing that we saw here in any way dents the thesis.
No, you're right, Dan. And listen, none of them are backing off their CapEx plans. To your point, I mean, AWS, actually acceleration at AWS in terms of revenue growth, up 19%. There is still, though, this larger question as to whether you're going to ultimately get that return on investment over time. You obviously believe that will be the case, but what do you see on the ground in terms of applications that are coming in the near term that will start to at least alleviate any of those fears some investors may have?
From the enterprise perspective, and we'll hear it from Godfather of AI, Jensen NVIDIA in a few weeks, the use cases and the amount of enterprise right now that are on that AI path is up 4 or 5x. So these enterprises are on the path from what I believe are going to be use cases across healthcare, financials, insurance, retail. As we've always talked about, it all comes down to show the monetization. The spending's there. And I think when you look at what Sue talked about, Nadella, what we talked about from Sundar, Jassy, this revolution is happening. The monetization phase is now just starting. I'm not going to see that we're going to have air pocket between the CapEx and when revenue comes, but to bet on this and to bet against it, to me, like to bet against Cook and 2.2 trillion in terms of where we ultimately see the actual install base, and you look at actually right now an AI revolution coming to Apple, that's a tough bet.
Jim Cramer is highly optimistic about Nvidia's future, projecting a 100-fold return over the next decade and labeling it a once-in-a-generation opportunity. Despite recent market fluctuations and concerns about consumer spending, Cramer remains confident in Nvidia's dominance and the significant demand for its GPUs. He argues that major tech firms, like Amazon, are struggling to keep up with Nvidia's supply, underscoring the company's critical role in the AI sector. Cramer dismisses concerns about AI technology being overhyped, insisting that substantial investments from tech giants validate the sector's growth potential and Nvidia's leading position. In contrast, Cramer is skeptical of the so-called AI 2.0 stocks that promise revolutionary products but have yet to prove their financial worth. He continues to endorse AI 1.0 infrastructure stocks, which include semiconductor and data networking companies, due to their substantial and ongoing investments in AI. For now, he believes that these infrastructure plays are where investors should focus, rather than speculative AI 2.0 stocks. What do you think about Nvidia's long-term growth potential? Are you more inclined to invest in AI infrastructure stocks, or are you waiting for AI 2.0 products to prove their value?